Hi there, everyone. This is Stephen Walton from Teed Saunders Doyle. I'm just be presenting the March 2020 financial statements to you here briefly, and I'll give you some insights on the changes in 2020 and the 2019 year end. As we can see right now here on the screen, I've got the financial statement reports that we're going to quickly go through. On page 1, we have the review engagement report where we outline the responsibilities of management and the responsibilities of Teed Saunders that you guys can go through and read through. And on page 2, we get through essentially the balance sheet or the statement of financial position. As you can see in 2020, the cash balance is, well, it's at zero. There was cash in the bank at year end, but there was a few outstanding checks. As we can see, it's the cash balance is instead shown as a negative balance under bank indebtedness. Part of this is due to the higher accounts receivable balance in the 2020 year end. As we can see, accounts receivable up near the top is showing a large increase of 63,000 roughly. And this is due due to issues with collectability and COVID. And this was having a financial restraint on, MB Cattle being able to show positive cash flow, and as well at the end of the day also paying their vendors as well, as you'll see later on. So as we go down to accounts receivable as well, some insight on that. There was 53,000 that was due receivable from the province of New Brunswick. Most of that was due to some of the projects that were going on in 2020 and also carrying into the 2021 year end. The remainder of that, for the most part, was amounts due from producers. The next line down, you see HST recoverable. There's no receivable balance there because just due to the timing of the filing was there's more HST collected, and on the other flip side of that, there's an HST payable that you'll see down below. Prepaid expenses is very comparable to previous years. And then property and equipment, you'll see there's no new equipment additions or anything like that. As you see, it was just amortized down, so the balance is lower in 2020. Again, now as we look into the liabilities and net assets, you see under accounts payable has increased by 30,000, and this again has to do with the restraint on the cash flow, as the receivable balance was much higher. So then in return, MB Cattle could not pay down its vendors, and the accounts payable balance had increased substantially. Bank indebtedness, we touched on that earlier. That ties into the bank reconciliation at year end. HST payable, as you can see, there was a small balance payable at year end that I'm sure was paid no problem, subsequent of those receivables being collected. The Canadian Cattlemen's Association dues payable, that balance had increased just a little bit this year by 6,000, and that's just due to more producers, and also again has to do with the cash flow issue that was going on at year end. And the loan payable to Canadian Beef Agency, there was no changes of that at year end. So then net assets, as you can see at the bottom of the page, we see invested in property and equipment and the unrestricted fund. You want to flip over to page 3. we'll see that those numbers tie into here. And you have two funds, the investment in property and equipment. The ending balance of 277 ties into the property and equipment balance that we were showing here as well on the statement of financial position. And then the remainder of that, it all goes into the unrestricted fund, of which, as you can see, you had a surplus of $1,800, which is fairly good with all the underlying issues, especially as we got into the month of March. And then as for page 4, now we look into the details of the statement of operations. Key point on this page is to notice at the top, the 2020 year end was a 12-month year end, and the 2019 year end was only 7 months. This was due to a change in 2019 of the fiscal year end for accounting purposes. So as you can see in 2020, some of these levies for revenue, the levies amounts, they're obviously larger as it's a 12-month year end versus a 7th-month year end. As well, there was more producers in the 2020 fiscal year too. So as you can see, there's quite a bit of increase in income for 2020, as total revenue had increased by 74,000 roughly. As we look down at the expenses, we can see that administration fees, they had increased by 40,000. I mean, that again is part of, there's more work to do on the admin side and dealing with producers, and also a 12-month versus a 7th-month fiscal year. The contribution to Maritime Beef Council was new in 2020. As you can see, that's a new line item. And for dealer commissions, that had increased. And again, that's 12-month versus a 7-month year end. And I think for most of the other items on the expenses side, it's just small increases. Again, as we look at a 12-month period versus a 7-month period in 2019. Then as you look down on this page 2, you'll see excess of revenue over expenses from operations, still positive returns, 13,000. And then when you go to the projects section, you see just a one line item for revenue and expenses that ties into note 8 that we'll see shortly here. And projects, there's just a small deficit of $5,700. And then other income and expenses, again, we'll tie into later in note 6, and there's a small deficit there that brought us to the total excess of revenue and expenses of $1,700, which will tie into page 3. So that's it for page 4. And page 5, you'll see the statement of cash flows. This is more or less the ins and outs and the net change of on your statement of financial position. So you'll see at the top, the excess of revenue or expenses ties into page 4. And then the items underneath, changes in non-cash working capital. You'll see the credit in accounts receivable of 63,000. This has to do with, as your accounts receivable increases, your cash balance decreases. So that credit balance of 63 is just showing the net change that we're showing on page 2. As you can see, the 97,000 versus the 34,000 in accounts receivable. So that's where you'll see a lot of these numbers on the statement of cash flow tie in to the statement of financial position. It's the net change of what you see on page 2. And the rest for the statement of cash flow is pretty much self-explanatory. As you can see, there was a decrease in cash of 19,000, which is in excess of the beginning balance in the end of the year. And so at the end of the year, there was a negative cash balance of $316. After the statement of cash flow, we go into the notes, the notes to the financial statements. You guys can take a look through and read. This was pretty consistent from previous years. There was no changes to make note of on page 6. Page 7, I guess when you want to look down to note 6, we disclose some related party transactions. As you can see, there's disclosure of expenses that were paid to the Canadian Cattlemen's Associations, and we make note of what we paid in, or what the organization paid in 2020 and 2019. As well, we also disclose that there is a forgiveness of dues of $10,000 in the 2020 year end. And then for note 7, we have done a disclosure just on the COVID-19 pandemic, and that there was just uncertainty, I guess, at the time these statements were produced of what impact it will have going forward. And now as we look at page 8, I guess this is one key area where you guys can look into on the outcomes, I guess, of your projects during the year. I guess all things aside, the projects you intend to get to break-even point or close to break-even point. And as we can see in the 2020 fiscal year, there was a small loss of $5,752. And those in particular had to do with the fall producer workshop. There's a small loss, and as well as the supporting financial management skills project, there was a small loss there. That those two projects together was the only reason why there was a small deficit in the project revenue. And I guess at the bottom of this page, you can see that we disclose that all the project revenue is from grants received from the New Brunswick Growing Fund, or Growing Forward 2 program. And with that, I guess that's the end of the statements and the financial review. I'll let you guys get back to Cedric, and if you guys have any questions or follow-up items that you want us to dig more into, you can please feel free to contact myself or Brenda, and we can get back to you within a reasonable time for so hopefully some answers to your questions. Thank you.
Okay, so thanks for that, Steve. Maybe just a brief comment on the administration fees that the association carries in relation to its net revenue, and how you see that relating to other nonprofit groups.
So how that ties in, I think, like for the most part, what I've seen with MB Cattle, I guess, I don't know, I'd have to, go back and forth with you guys to see exactly some of the agreements with the administration costs that you have with, I'm trying to think of the name. I think it's New Brunswick Agricultural Management. Is it not, Cedric?
Yeah, that's right. The AMS group. That's right.
Yes. Yeah. That's the acronym. I mean, it looks like they are reasonable, I guess, or if not, maybe a little on the higher end, but I guess based from what I've seen in the past and, from some other organizations that have administration fees, I mean, they definitely are comparable. I guess for them, it's probably, if it's more work for them, it's a higher cost for you guys, I guess. And um, I, yeah, I just think they do seem reasonable, but I would have to do more digging to see, what exactly is the going rate on those administration fees.
No, fair enough. Those are reasonable comments, certainly, Steve. So this is great, and we'll be presenting our budget here after this. So really appreciate your time, Steve. And like I say, if we've got any questions that can't be addressed with us here now, we will take them in writing, and we will be back in touch. So thanks very much.